Good afternoon, Profiteer traders. Welcome to another Profiteer video. Today we're going to talk about the NFP report and how we set that up. Take a second to read the risk disclaimer and make sure that you understand that trading options and futures requires involving yourself in substantial risk of loss and is not suitable for all investors, and it should be not taken lightly. Anything we say or do in the Profiteer room is essentially just for educational purposes only and should not be misconstrued as financial information or advice. So please take a second to read that and let's get started. Okay, everybody, welcome to another video with me, MK. Today, if you're new, we're going to talk about the non-farm payrolls, the employment numbers that came out with it, as well as the Canadian employment and inflation US numbers. So if you're new, I don't want to get too in depth with what these numbers mean. All I'm doing here is showing you how professional traders trade news. We don't just use candle charts, we use what's called order flow, and we use order ladders. So what you're going to see on the ladders might seem overwhelming, but it's actually trackable over time. You can analyze it just like you analyze charts, and you can effectively take those tools and implement them into your technical analysis to effectively extract profits during news. The last thing I'll say is that trading news should not be something that you're afraid of. It is honestly some of the best opportunities that occur. So I encourage you to take this video and transfer it into your trading plan and try to learn to trade news. So let's go ahead and get started. I'm going to go ahead and share the screen with you. All right. So what I want to touch on here is what occurred prior to the report last night. And if you take a look at the Profiteer.com website, you'll find that we have the setups for our daily trades available for you regularly. And what I posted in there was actually, why don't I just go to the website and then I can show you exactly what I'm talking about. So on Profiteer Trading, you can see here we have the NFP MK Magic Playbook. So if you scroll up to the beginning of the initial session, about 24 hours ago, I said that there was an upside break in sight here, and we were looking for a correlation to hit all of those USD crosses. So if you're new and you don't know what that means, take a sec to Google DXY index, and then go ahead and head over to Wikipedia, and notice how there is 1, 2, 3, 4, 5, 6 currencies that are weighted against the dollar index. So that is why when you look at the futures, you see that it starts with a 6. The 6 E's is the euro, the 6 J's is the yen, the 6 B is the pound, the 6 C is the Canadian dollar, the 6 actually I don't think there is a krona future because it's not heavily weighted or traded rather. And then the franc has the 6S. So those are the futures available for trading the initial price action that occurs out of the dollar-based crosses. So I wanted to start with the bonds because that's the trade that we took today. But looking at the NFP Magic Playbook that we posted yesterday, notice how we started with the dollar because the dollar is king. It tells us all first. Now, fundamentals, okay? U.S. data is in focus again. Monday we have a strong, or had excuse me, I can't spell. I'm dyslexic, guys. But we had a strong ISM and PMI figure on Monday, and Wednesday's service was a beat. Clear focus on the U.S. data, right? So fundamentally, the report that came in this morning at 8:30 Eastern was extremely important because that's what was going to move the markets. So relative to what was going on, look at the analysis that we posted last night. So this is an hourly chart. And for those that are new, one candle represents 1 hour of time. So if the candle starts at 8 o'clock and is moving around for a while, it's not going to start the next candle until the next hour because it's an hourly chart on the dollar. So you can see that we had a couple of levels that acted as key levels to look at, and we drew a trend-like continuation pattern that met at an apex where I thought price would go based on the swing low from the year prior, and that's sitting at 98.63. So if you take a look at the technical here, I say that a clear retest of the initial upside resistance at 98.63 accelerated bid into this level would expose a retest of the 98.70 retracement. Now, if we take a look at price action on the dollar as we close today with the same analysis, you can see that we reached that 98.63 level at about 4 o'clock in the morning overnight, okay? And then into the overnight session, we retested that area, consolidated, and then once NFP came out, you saw basically just a flush where you had this continuation pullback buy that pretty much just made a lower high, or a higher low, excuse me. So that was the first thing I was looking for. And if you look at that price action, you saw that occurred, that 98.63, pretty much in the middle of the night. So that was my first clue on what I was going to want to do. Here you can see the reports that were going to come in and what was to be expected. So we expected a 160K versus the 145 prior. It was a beat from that, so that was positive. Average hourly earnings year over year was 3.0 versus the 2.9 expected. Not too worried about the year over year. I usually look at the month over month. Most traders do. So we hit 0.3 was the expected, 0.1 was the previous, so we were expecting an uptick. Weekly hours expecting to be flat, payrolls no forecast, manufacturing was expected to increase, and non-farm overall again was supposed to be higher than expected. So this thing measures the change in the number of people employed during the prior month, excluding workers in the farming industry, given that full employment is one of the Federal Reserve's mandates. It is very closely watched. A reading that is stronger than forecast is generally supportive, bullish for the dollar, while weaker than forecast reading is generally negative for the dollar. So it's very interesting that prior to the report, we already reached our target. That really told you a lot about how this market was pricing this in and what people might have known before everyone else. It's called the whisper number. So looking at the weekly view of the dollar, you can see that we imply a bullish continuation off of this report into a very particular event, which is occurring on February 12th. And I want you all to be very cognizant of this event. It's going to be the federal deficit, and that's on February 12th. And you can see on my weekly chart, I'm basically running right into that. So I'm expecting some price action in these 98.90 levels from the previous 618 time cycle to head into this federal deficit. Now looking at the euro, you can see for those of you that are new, the euro is the inverse correlation of the dollar. It's literally the antithesis of the dollar. So I made it simple. A trend line break here. Simple, right? DXY up, euro down. The setup was inverse, so I could fade or get directional, meaning that if it bid up, I could sell it or wait for the lows and just catch the fade to the upside. So if the dollar is going to head up on this report, then I was looking for euro to break down. And you can see that on my analysis, I have a trend-like slope living at this channel where it appears that the euro wanted to retest that break lower. The internal setup on the euro for this was also important. So again, I explained to you guys the average weighting of the DXY basket. That's where we started. So I want to focus now and look at the initial order flow and time price opportunity that was occurring during the actual previous sessions. That's the beauty of having futures on the underlying or as derivatives, right, for the underlying, because we can then analyze volume and profile accordingly. So you can see we had this sort of downtrending week. And if you guys caught my analysis on Euro on Monday and Tuesday, we were looking for a break of this trend line. And that's exactly what we got. Once buyers gave up trying to buy this thing, you can see that we broke the trend line, causing an accelerated move into this box. Tried to wick back up towards that moving average here, the 50-day moving average, and then ended up trending lower into this little box of liquidity. Now, what's interesting is that I drew this ellipses last night, as well as this one, and that's where I was looking for price to potentially go. And you can see that pretty much before we could even get through the night, we had initially tested that zone accordingly. And let me make sure that I've got this right for you guys. Load the layout, hourly. Okay, so where is my... Okay, so here it is. You can see that those same circles that we had been waiting to, you remember we were about here. We pretty much headed right into that circle overnight. We didn't even get a chance to really catch it. But this was the first clue, guys. This was the first clue going into NFP. You always want to look at currencies first. Okay? Now, let's take a look at the next setup. We had, and let me point this out again, guys. You see this giant cave of liquidity here on the euro. This is an area that I'm going to be very interested in retesting into the coming week. So let's keep an eye on that. And that's between the 106 level all the way up to the 125 handle. You guys know I use the simpler trading tools, and that was just basically confirmed non-mission control with my early in, early out bars, meaning we had this break lower on the euro that we identified last week. If you look at the analysis and head traders, I had mentioned that I was looking for this ellipses to break, and then the next target was going to be this box. And look at that. We headed directly into the box, wicked right out, and then started to trend higher. So I'm kind of looking for a breakout in the days to come, even though we managed to sort of retrace this whole thing and head even lower. And I can kind of get into that next week. And then finally, you can see that I have the bonds here, and I had my eye on the 130.31. And that 130.31, and just so you guys see right there, that was 22 hours ago. The 130.31 was in sight because of this liquidity gap, and that's where the 200-day moving average was sitting, waiting for price to hit there. You can see it didn't take long, 12 hours from the initial post. We had finally hit that 98.63. And to point this out to you guys, let's take a look at the actual bond now after the close. Remember, we talked about that 50-day moving average. It was sitting up here. We had tapped right into that area, retested this box, and now we're basically looking to either break out, or we're going to be kind of consolidating in here and retesting this box lower. So again, for those of you that are new, these are just trend lines, moving averages, volume profile. And if you're interested in learning more about that, you can DM me directly and I can show you how and where. So, okay, now that that's all said and done and you guys know what the setups are, let's go ahead and look at the actual ladder. So one thing, so you guys understand, is I'm going to have the video basically playing with the squawk that occurred during the actual price action. So you're going to be hearing the report coming in through two squawks. So that can be a little bit confusing at times, because you might find that the two squawks talking over each other is hard to understand. But nonetheless, try not to focus too much on that and focus solely on the price action and what I'm trying to explain from analyzing those ladders. So give me a second here, guys. Just trying to pull up this video for you.
T-Notes.
Whoops. That's very loud. I apologize. All right.
Nothing happening or very
So this is just a couple minutes prior to the report.
payrolls. If you don't have
And again, I apologize for all the noise.
50,000.
And here, guys, I'll pause it for a second to kind of give you like a slow sort of explanation of what's about to happen. So, okay, you've got first the T note. Oh, I'm so sorry, guys. This is not working correctly. Okie dokie. All right, now you guys should be able to see the screen. So, okay, what I want to point out here is the initial price action that you're going to be seeing on the bonds, gold, not so much copper, but bonds, gold, and equities. So you can see NASDAQ here is going to be an important one to be looking at, because this is going to tell you how I set everything up accordingly based on the way that they developed kind of in synchronicity. And looks like I've lost my video here. Sorry, guys. Let's see. Okay. So again, it's going to start off with the bond. It's then going to move over to the gold. And then you're going to get a move on NASDAQ that's going to be significant in identifying where the opportunity lies. So the bonds, gold, NASDAQ, and just focus on those for now. Okay. Go ahead and play this.
Earnings expected 0.3% month on month, 3.0% year over year. UGAZ expected 34.3. Labor force participation expected remain at 63.2%. Canada data at the same time. Net change in employment for January expected at 17,500. And unemployment expected to tick up a tenth to 5.7%.
Now, guys, pay attention to my mouse. The mouse is going to explain to you how I'm trying to assess this. So the top left is going to be your bonds. Got the gold up in the middle center and the NASDAQ on the bottom right. So you can see that all the ladders.
The US data starting with non-farm payrolls projected at 160,000.
Okay, I'm going to pause just before the report to try to explain this, okay? So I want you to take note of how the bond is giving us the first clue here. And the bond is giving us the first clue because there's a difference between a thin market and a thick market. And what I mean by that is that when you have a market that is heavy in liquidity, and for those of you that are new, liquidity means the amount of trade going on within that market. So a thick market would be the S&P and the bonds, because the S&P and the bonds have thousands of contracts being traded within them at all times. So if I want to go and buy an S&P contract and throw down 500 contracts, it's going to be pretty easy for me to get filled at the price that we're trading at. If I want to do that with the bonds, that's the same deal. If I go over to, say, gold or maybe crude oil, and I try to throw down 100, 500 lots, no one's going to want to take that off of me because it's a thin market. If you want to get 100 lots in gold, you're going to have to buy or sell cumulatively over time across the spread in order for that to be effective. So the reason that I look at the thick market first is because I want to know who's actually in control. Because if you're a large buyer or seller, then you're going to be able to control a market that's large if you have large size. And we're looking for that risk on, risk off correlation that we're always kind of trying to identify. So I'll go ahead and click play here. And now when this hits, pay attention to how all the ladders are trying to price in the initial report.
225,000, 65,000 expected, unemployment at 3.6%, 10 higher than expected, month-on-month payroll 0.2%, 10th lower, unemployment rate 3.6%, a 10th higher than expected. Average hourly earnings year-over-year 3.4%, 34.3 in 9. Canadian data, unemployment plus 34.5 thousand higher than expected, unemployment rate 5.5%. Participation rising 0.2 to 63.4%. Small revision to the prior, it was up 2,000. Up 0.2 in January. Canada data, unemployment at 5.5% is 0.2 lower than expected. The net change in employment at 34.5 thousand, above the 17.5 thousand expectation for Canada.
Okay, so watch the bond.
Stocks tick up along with interest rates here falling the better than expected headline jobs number. We did see the increase in the unemployment rate, but that came alongside an uptick in the labor market participation rate and better than expected year-over-year hourly wage data.
Notice that I'm long the bond now at 130.20. Remember what we were looking for was 130.30.
Debt ratio at minus 145,000, so better than expected.
So we're long the bond, and now we're waiting for the accumulation to occur so that we know that we're ready to get long on gold. So you can see that the ladder is developing a continuation bullish pattern on the risk off, because the 30 here, the gold, and the 10-year that we're long in are all catching a bid, and all of the short sellers are basically being forced out of the trade. So you can see right there was a large bid filled, and we're basically looking and getting ready to get filled. Boom, there we get filled at 68 even, and then bam, price starts ticking up, snapping higher and higher into this next volume level of liquidity. So that's where my first resistance is going to be. And remember, I'm sized into these trades heavily to ensure that I can extract profits as fast as I can with the volatility. NASDAQ here, we are also short. We're short the 40 levels here, this little pink box. And as NAS starts to kind of get volatile, because it's a thin market like gold, like notice how much it moves with gold compared to the T-note, which just kind of sits in one spot. This is kind of my indicator, the T-note. I'm just looking for that T-note to continue ticking higher and the gold to follow, and then NAS to continue ticking lower for that initial 3-minute risk off run that we can extrapolate profits from. Go ahead and fast forward this a little bit for you guys. Okay, so now we're basically just representing exactly why we did that. In the TPO, you can see that there was a huge press down, a single print, that filled out this area of lack of liquidity. Oops. Sorry, guys. So this area that lacked liquidity was filled up immediately, and then we shot right back into range and then started to retest some of that VPOC area before finally ticking through there and finding a bit higher. You can see here on the bond, as long as we held in between that orange box and that green box, we were going to look to get long into that ellipsis. And you already saw that we closed well above that and basically filled out all of this liquidity. You can see the profits developing here. And this is a 2-account trade where you've got the Axia demo here and the Top Step Combine here. So we've got quite a bit of liquidity to play with in order to train our massive size trading. So you can see that we are up about $1,000 there. We've made about 18 on the day. And then boom, there you get the snap up and the risk off. We are still waiting for this gold to get some initial momentum. And then finally, there you go. You're getting a snap lower on NASDAQ. All those people who bought the NASDAQ low are capitulating. You can see that the buyers on the bonds are well in control. The buyers on gold are well in control. And the pound, we've got long as well. This one didn't work out, but initially we should have just taken profit up here. But again, short NASDAQ, long the bond, long gold. And you saw exactly how we assess that going in and out of the report. All right, guys. There's not much else that I can get at without getting too deep into it. So I'm going to go ahead and just wrap up the video. I don't think anything else happened here. Yeah. All right, guys. I hope that this was helpful for you and that you feel like you understand what might be going on. I know if you're new, it might seem completely ridiculous, but over time we can kind of chisel away at some of these concepts. So again, I hope you guys have a great rest of your weekend, and we will see you all in the Profiteer Trading Room on Sunday.